Their DNA is mostly about the internal combustion engine. Their exponential growth opportunity was 100 years ago. The new exponential growth opportunity is electric and then autonomous. They are not well prepared for that move. We think most of them will be disrupted. I think there'll be huge consolidation in the space, restructuring. And in the traditional asset management world, our strategy was considered a little out there, very volatile, very risky. And our point of view was, wait a minute, the risk is not in our strategies. The risk is, if not today, within the next 3 to 5 years, the risk is in benchmark-oriented strategies, backwards-looking strategies. I think I learned really early in the business that when everyone is moving in one direction, and they're sure that that's the way the world's going to work, and we see reasons that is incorrect and move in the other direction, the rewards can be enormous. Tesla, of course, has been a wonderful way to showcase our research, because we were thinking that electric was possible from a scaling exponentially point of view within 5 years of the starting of the company. We started in 2014, and that certainly has proved correct. And we had the model, again, centered on Wright's law, that's critical to our analysis, such that we were watching the numbers coming out, and they were following the model that we had put in place. But because most analysts out there weren't even considering electric as relevant for 10 years, we had to convince the public. So I think our way of doing research, the courage of my conviction born out of our research, and standing on the shoulders of you and our analysts, I was able to suffer through the slings and arrows, and I didn't even consider it suffering, because I knew we were onto something big.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're watching some clips of ARK Invest Cathie Wood discussing disruption, innovation, and their investment strategy. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And for the 3 people watching who don't already know, ARK Invest were both early and big investors in Tesla stock, and obviously that's worked out okay. In fact, as I record this, Tesla stock is pushing into all-time high territory, approaching $520 per share.
So you've had a lot of experience with a lot of different kinds of management teams over the years in a lot of different strategic positions, sometimes great strategic positions, sometimes poor strategic decisions. How do you think about and assess when you're meeting with management teams? Like, what's the secret sauce for them to navigate this landscape? How do we think about that?
The secret, guys, ready? Make sure you're sitting down. This is really important. Ready? The secret, wait for it, is engaging your brain, looking at the data, and then finally inferring based on that data what the future might look like. I know it's crazy, but that's actually the secret, versus looking in the rear vision mirror and going, oh yeah, that used to work. That's obviously going to keep working. I don't need to look at the data today because that used to work, so I'm just going to keep doing that. It's nice, safe, and comfortable.
Well, I think we're learning more and more about old DNA and new DNA. Tesla is a great example, a very high conviction stock for us, as many people know. And what we needed to know first was, before we even met Tesla, we needed to know, okay, this movement towards electric, are we ready for prime time? Is battery technology ready for prime time? And this movement towards autonomous, is it within our 5-year time horizon? And so we took a white sheet of paper, as you know, Brett, because you guided a lot of this research. And we just tried to figure out what kind of cost curve decline are these battery pack systems on? And when will they reach a price that is competitive with gas-powered vehicles, like on a like-for-like basis?
Oh my God, Cathie, did you just talk about data and inferring?
So we as we're doing that research, we find the companies, the visionaries who are driving these new ways of doing things. They are the companies usually with visionary managements and a lot of new DNA. They're not stuck at all in the existing world order, and typically they are dismissed by the traditional world order in early days, which, you know, the auto manufacturers laughed when Tesla lined the bottom of its cars with quote unquote cell phone batteries. You know, they just dismissed it. And they missed a very, very big disruption. And now they are scrambling to try and catch up. Their DNA is mostly about the internal combustion engine. Their exponential growth opportunity was 100 years ago. The new exponential growth opportunity is electric and then autonomous. They are not well prepared for that move. We think most of them will be disrupted. I think there'll be huge consolidation in the space, restructuring. So we use our research as our screen, technologies first, which companies are running with these technologies, which are the innovators who are actually creating, you know, this new opportunity, and we follow them closely. And we're in a world where there are many opportunities because of artificial intelligence. Are Well, first, there are exponential growth opportunities, but they are also winner take most opportunities. So autonomous vehicles and taxi networks, we think will submit to natural geographic monopolies. It's our job to figure out which company is best placed in each geography to become effectively the winner taking most in that opportunity.
Cathie makes a very important and valid point here. It seems likely that autonomy is going to give rise to local geographical monopolies because the data is relevant to where in the world we're talking about. Roads, signage, conditions, environments, highway networks, everything varies slightly from place to place, from region to region. But I also believe that it's going to be a little from column A and a little from column B, meaning that once full self-driving, once autonomy is solved at a generalized level, I think you're 95% of the way there. It's just a matter of getting some of that localized data to really understand and adapt. You're a human being, right? If I dropped you in a vehicle and you already know how to drive and dropped you in any other country on earth, you're probably going to be competent at driving. You may not be brilliant. It might take you a little tiny amount of time to adapt, but that's that last 5% or so. Getting autonomy solved most of the way in one geography, I think, is going to make it a hell of a lot easier to solve somewhere else. It's just a matter of filling in a few blanks. Tesla has won the United States. There's no question on that. Tesla robotaxis will dominate the US. China, maybe a different story. Maybe a different story in Europe yet. I think these are still up in the air, but Tesla has a very good chance at taking an outsized share of these markets as well. The reason I say this again comes down to the size of Tesla's fleet, which is growing exponentially and collecting data. They have an unassailable lead that is accelerating. I mean, how do you catch them?
But, you know, as a research team, we could be pitching you, like there's all kinds of, you know, IBM basically talks about every one of the technologies that we focus on, right? And I could pick kind of, you know, call it old DNA companies, or you could say companies that are already at scale that are talking about, you know, they know how to manufacture things. They just need to transition to electric. Like, why not those companies? What do you think hurts them? Like, why is there what does old DNA mean?
You know, what it means is when you think about it, because we haven't had this much innovation occurring at one time, you know, tried and true index-based strategies, they were very successful for a very long time. Not much was changing. So they did fine and outperformed active managers who were becoming more benchmark sensitive, which was not a good idea, by the way. So now that we're in a period of momentous change, We need the right DNA, because the old DNA typically it has R&D budgets which are focused. They're backwards looking. The world didn't change for 100 years, and in their view, I remember very well when we started ARK. In their view, electric wasn't going to become relevant for 10 or 15 years. In fact, I think IHS in 2020 expected 250,000 electric vehicles globally. And I think we're on par for, I think it's certainly over 2 million. They were tenfold off, an order of magnitude off.
There's really something in this. See, many of these forecasts about the future, when they're discussing disruptive, innovative technology, completely miss the mark. I mean, an order of magnitude, that is embarrassing. But that also signifies enormous opportunity. As many of you will know, the only stock I've bought since November 2017 for I'm not even high, what is that? For 3 years is Tesla stock. Now, you could suggest that I'm a moron. Maybe I fantasize about riding Elon's rocket every night. Did I just say that? I did. Okay, well, we're just going to leave that in there. Or maybe, just maybe, I actually looked at the data, the numbers, spent a lot of time really understanding the opportunity and realized, EV transition, inevitable. Full self-driving being achieved, inevitable. Tesla's data lead, unassailable. Tesla's engineering prowess, incredible. World leading, not even close. Tesla's leadership, Elon Musk, track record, wow. Yeah, you know what? I think Tesla's going to do relatively well. I think that there's an important lesson to be learned here. Oftentimes when you hear someone with an incredibly high level of conviction and they sound completely insane, rather than immediately dismissing them, it's worthwhile asking enough questions to ascertain why they believe what they believe. What data are they basing these opinions on? Where's the evidence? How are they able to infer what they believe is likely to happen in the future? Oftentimes, I think people arrogantly dismiss without investigating, and obviously this is how you miss enormous opportunities. But let's be honest, most people are incredibly lazy intellectually. It's too much work to really thoroughly investigate this opportunity, so much easier to dismiss it as crazy rather than verify, validate, confirm, or refute.
And that usually is why we have such an opportunity. The old world doesn't believe that innovation can come on the scene and evolve that quickly, just because it hasn't in the last 100 years.
You know, it's funny, I hear you talk about these management teams. I can't help but think of you, Cathie. How do you, in terms of, talk a little bit about founding ARK and how you think about kind of the culture of ARK and what we're doing within the context of the investing landscape.
Yeah, I founded ARK for 2 reasons. One, to focus only on disruptive innovation, because with your help, Brett, we were identifying major opportunities all occurring at once, 14 different technologies involved, and we didn't think the world understood what was about to hit it. And in the traditional asset management world, our strategy was considered a little out there, very volatile, very risky. And our point of view was, wait a minute, the risk is not in our strategies. The risk is, if not today, within the next 3 to 5 years, the risk is in benchmark-oriented strategies, backwards-looking strategies, because of the value traps which are populating them increasingly.
You are Cathie Wood starting ARK, and I'm on the other side, and I'm saying, listen, actively traded ETFs, that's something that doesn't really exist. Why do that? Why call yourself a thematic manager when growth equities is a box you could fit into? Why start something that would be available to retail clients when you could do, a hedge fund? I could say all those things. How do you and also I could say to you, why are you buying Tesla when it's down below $200? It's, you're crazy. Can you talk about, even within the context of your career, how you have that kind of strong, instinct for what to do and stick by your principles?
I think I learned really early in the business that when everyone is moving in one direction and they're sure that that's the way the world's going to work, and we see reasons that is incorrect and move in the other direction, the rewards can be enormous.
Cathie is really singing my song here today. Now, as somebody who's been investing against the grain now for over 10 years, hearing pushback from well-meaning but incompetent people trying to save me from losing all of my money, taking too much risks, investing in a company that's going to go nowhere, etc., I've learned at this point in time that it's not even worth listening. But it's a fantastic metric, because if the consensus, the herd, the sheep are trying to say, no, do this, do this, do this, and my conviction, my reasoning, my analysis points here, the gap is called opportunity. This is why for the last 3 years I did nothing but buy Tesla stock with every spare cent that I had, because I could see that disconnect. People saying and thinking this, me believing this, not because of a funny feeling, but because of my research, analysis, and evidence-based thinking. I'm not suggesting that everybody who goes against the grain is going to be a successful investor, but if you do your research thoroughly and really understand the opportunity, you have strong levels of conviction, and that goes completely against the grain, oh man, you're potentially looking at an enormous opportunity. And we've seen this play out with Tesla stock. Need I remind you that on December 9th, 2019, with Tesla stock less than $70 per share, split adjusted, I posted one of my earliest videos on this channel entitled Waiting for Tesla Stock to Dip? Good Luck. In it, I laid out my reasoning, my research, and what I thought were catalysts for strong upward pressure on Tesla's stock price in the future. And we all know how that worked out.
You know, we wanted to democratize investing. And, there's a huge intergenerational transfer of wealth starting to take place as the baby boomers retire and pass on. And this new generation really wants to understand what they're buying. They love the transparency. And they love, following us on social media, especially when there's one big controversy. Tesla, of course, has been a wonderful way to showcase our research, because we were thinking that electric was possible from a scaling exponentially point of view within 5 years of the starting of the company. We started in 2014, and that certainly has proved correct. And we had the model, again, centered on Wright's law, that's critical to our analysis, that such that we were watching the numbers coming out, and they were following the model that we had put in place. But because most analysts out there weren't even considering electric as relevant for 10 years, we had to convince the public. So I think our way of doing research, the courage of my conviction born out of our research, and standing on the shoulders of you and our analysts, I was able to suffer through the slings and arrows, and I didn't even consider it suffering, because I knew we were onto something big.
And we really do have to give credit where it's due. Cathie Wood and others from ARK Invest have been appearing in the mainstream finance media discussing the potential of Tesla now for years, being laughed at, ridiculed, and mocked. Well, who's laughing now? The moral of this story: the opinions of others, worthless. Do your own research, draw your own conclusions, and act confidently based on those. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.